Hey everyone, this is John Feneck from the Feneck Commodities Report. This is being recorded for Investor TV with my YouTube partner, Don Durrett of goldstockdata.com. Don, how's it going today?
Well, good, John. Feels like we're getting
Good.
real Christmas.
We're getting some early Christmas gifts for sure in the melee following not only November 5th, but now the Fed on December 18th. So let's jump into that. And then we've got a special guest with us today. As everyone knows, we record a monthly piece with a CEO. In full disclosure, Don and I both own shares in this company, US Gold. The ticker on the NASDAQ is USAU. We'll be getting to Luke Norman, the chairman, here in about 5 to 7 minutes. Don, I'll just hand it over to you to kind of give your assessment of what the Fed, rhetoric yesterday means for our sector. Because it was pretty shocking to see the broad market really sell off between 2 and 4 Eastern yesterday.
Yeah, for gold, the big one was the dollar jumping to 108. So that really smacked gold hard. It's like gold has been ignoring the strong dollar, but kind of used yesterday as an excuse to sell off. But I think it actually helped gold in a certain respect because higher inflation, we're at 4.5% on the 10-year, and 30-year mortgages are 7%. And Powell basically, the reason one of the markets kind of was sold off hard yesterday was Powell kind of implied inflation's a problem. And he was very hawkish on that we need to address it and that getting it down to 2% is not going to be easy. And so everybody, after it was over, the expectations were that they were going to cut rates somewhat aggressively next year. And now it's only 1 to 2 cuts next year. So basically what that's going to do, it's going to put a lot of pressure on the economy because if rates aren't going to come down, it's going to be difficult. You're not going to have the cheap money that businesses need. And so that's going to put more pressure on the economy, which makes it harder for the stock market to stay where it's at or to go up next year. We've had, a 2-year bull market up, 20% plus the last 2 years. And so I think that what I've been waiting for is economic weakness. So if you go back to the 70s, the miners did well because we had economic weakness in the 70s, and then the 80s and the 90s, you had basically economic strength and the miners did nothing. And then the 2000s, you had economic weakness, the miners did really well. And now we haven't had that economic weakness since then, since 2009. And so that's what we need back. And so I think that economic weakness is going to show itself in the first half of this year, which is going to be good for gold. And so what we're waiting for, finish up my thought here, since we're doing this kind of quickly. I think that gold is going to be resilient here because of inflation, because of bond weakness, because of the global south. There's so many factors that are helping gold. And the only thing that's really going to hurt gold would be that, which is unlikely, is that the economy gets stronger, simultaneously inflation goes down, simultaneously the fiscal budget deficit goes down. I mean, these are things that are very difficult to fix. And so the things that are supporting gold is there. So from that perspective, I think we can be confident that even if the stock market crashes, that gold's going to hold somewhere between 2,300 and 2,500. I think 2,500 is a bit of a stretch. I think it'll go below 25, but it'll bounce somewhere above 23. And those are not terrible numbers. We have $1,000 margins right now, $700 to $1,000 margins. And so even if you go down 200, you still have $500 to $700 margins. So that's not terrible for the sector in gold. It won't be. And so my bottom line is I don't see a meltdown in miners because I think gold will be somewhat resilient here. The HUI is at 275 right now. I don't see it going much below 250. 240 to 250 is kind of my target area. So I'll end it there.
Yeah, I know you've been talking that 240 to 250 range that that is something that you think will hold. Just to go through what you just discussed, when you're talking margins, you're talking about the bigger cap names like Agnico, AEM, Newmont, NEM in terms of margins, right?
Any producer, any gold producer.
Okay. Yeah. So I mean, obviously, not all of those are created equal. You've got Newmont with costs going up significantly, this year, over 1,600 ASIC right now. Agnico really has done a better job, I think, this year of separating themselves from the pack. There's been others too. Alamos has had a great year. Kinross. I mean, there's been a lot of winners in the sector, and it doesn't feel like that on a day-to-day basis because you and I spend a lot of our time in the smaller stuff, and the smaller stuff has not had a wonderful year. But I think what I took away from yesterday's Fed thing was not like there were a lot of people thinking 3 cuts for sure, like next year, but there were some even thinking 4 cuts, right? So two, or to you, what you just said, 1 to 2 is a stark change. However, now you have to deliver 1 or 2. And that's what I always tell people is the Fed constantly has done this. If you study the Fed over many, many years, they are just ratcheting this back to then not follow through on 1 or 2 cuts, but probably more next year. Because I see a lot of drama unfolding between Trump and Powell next year, a lot. I don't see this going smoothly at all. I think the Fed is going to be, a lot of the members will be brought in by Trump, just like he did with the Supreme Court. And I think he's going to have a lot more control over the Fed direction than people give credit for as we sit here at the end of 2024, right? We're going to know a lot more in Q1. But I personally feel that the Fed yesterday was just overly hawkish. I mean, I don't see how they only cut once next year or even twice. I think they cut more under Trump because Trump has demonstrated, right, in 2020 what he would do, and he was not the kind of guy that would, if you look at his wording, he was anti-dollar. He would tweet about anti-dollar stuff over and over again. He was pro-real estate, right? Neither of those things want higher rates. I'm sorry, you know. So I really think that we're going to have a flip-flop event here. So my message to my followers and clients yesterday and this morning was, you get a couple of opportunities in a stealth bull market like we've seen for gold, and this is one of them, right? You have to be buying from now to the end of the year. Pick up gold stocks that are trading wonky because of this, kind of rhetoric that I don't think is true. Any further comments, Don, before we introduce Luke?
Yeah, I just wanted to follow up on Numont. So yeah, their ASIC's about 1650. I mean, if we just use them as kind of a bellwether, so at $2,600, their margins are about 650, and so 650 is not bad. I mean, that's enough. It's really what it comes down to is expectations of where we go next. So if the expectations you go down, then nobody's going to buy it. The expectations go higher, they're going to buy it. So it's basically all about sentiment. So they're trading about a 10 multiple right now, which is low for a company of their quality. But my point is, I don't think Newmont gets into trouble if you go to 2,400. There's $450 margins are still enough to support the stock. So if your expectations is that gold's going to basically hold 2,400, Newmont's a really good buy here because that's like the bottom. So you buy it to the bottom and then wait for things to turn. So from a risk reward standpoint, if you want to make 100%, 200% on your money, which is a lot of people like that, right? You want to make 100, 200. Like me, I don't want to really make that. I want to make 3, 4, 500%. But if you want to make 100, 200% on your money, I think Newmont is basically a buy here and buy to the bottom.
Mm-hmm.
Because if you look at margins, I don't, and basically what I'm saying. Also, one final point on Newmont is their costs, I think, are going to go down. So right now they have about 14, their ASIC is about 1650. I think it's going to go next year. I think they're going to average below 1600 for the year. And it might go a little low below that, but I do expect below 1600 for their ASIC. So that means about 1900 break even. So we go to 2,900 next year, which I think is a possibility. You're going to have $1,000 margins. $1,000 margins, that stock could easily double easy next year. Okay, that's it.
Okay. And just for everyone's edification too, we're going to have a rebalancing in GDX. Numont is the largest holding in GDX. Literally, rebalancing will take place tomorrow, the 20th. So it probably will have taken place by the time this gets out to everyone. But I would mark your calendars as investors for the rebalancing next year, because those rebalancing dates are very important in terms of volatility. They usually happen on the third Friday of the month in December, March, June, and September. And that's something we always point out to listeners as well. Don, thanks for the comments. And let's bring in Luke Norman here, who's the chairman of US Gold. Ticker again is USAU on the NASDAQ. Luke, welcome to the show.
Thank you. And ta-da. I appear. Don, nice to spend some time with you this afternoon.
Yes, excellent.
Likewise, Luke.
So you have an Aussie accent there. So where are you from?
New Zealand. Don't worry, I get a lot of that. I live in Whistler, British Columbia. There's a lot of Australians up here. I'm just used to being called Australian, so I don't really take offense to it, Don.
All right.
Well, Luke, we've known each other for quite a while. I've been a big fan of yours and the company. I first bought shares, I think, in the threes. Stock's trading at $6.38 right now. It's been a long-term hold for us, and I know Don and Larry Leopard have been big fans too of what you guys have done. Why don't you start by giving us an overview here of the company for those that aren't aware of US Gold and what you guys have accomplished, but also touch on the November news, which I think is super important with your getting your permitting done in Wyoming.
Right. Well, what I'll do, I'm going to build up to that one, John.
Yes.
You know, as you are familiar with our history, but for those of you listening, and thank you and welcome, who are new to the story today, I'll give you a little brief history on US Gold Corp. Up until August of 2020, we were purely an explorer. Off the back of a very successful previous company that I was involved in, Gold Standard Ventures, we collectively put together US Gold Corp. And our plan again was just pure exploration. In August of 2020, I recognized that our CK project, or Copper King as we called it back then, just outside of Cheyenne, Wyoming, it needed the light of day. We needed to take a serious look at it as a development asset. So when you want to dig a hole, when you want to develop a gold mine, you go find professionals who know how to do so. So that was August of 2020. We brought in George B., who is our CEO. Now, George comes from a history at Barrick, where he's built some of the largest gold mines on the planet. So I think, as you know, John, he's more than qualified in being able to offer or opine or definitely engineer a hole in the ground, as I like to refer to it. But yes, in that very short period of time from August 2020 to here we are, December of 2024, we've taken a loosely defined resource project to a fully established reserve, almost 1.5 million ounce reserve. The deposit is significantly bigger than that, but hey, we needed a reserve. We needed something to work from. And we've then taken that reserve through prefeasibility study all the way through to fully permitted. So when you refer to November of this year, that was our very final permit that was outstanding, which was an air quality permit. So we did receive our permit to mine originally, conditionally, in April of this year. And I know that does not sound like much to a lot of people who are not as sophisticated in the mining sector. But believe me, ladies and gentlemen, that is quite the accomplishment. The reason why we managed to pull it off and pull it together is the location of the project. And you can see in my backsplash behind me, that's actually the deposit outcropping behind me. But like I said, it's 20 miles due west of Cheyenne, Wyoming, and it's located on state ground. Now, if we were on federal ground, or if we were, unfortunately, in the state of even Nevada, which is obviously gold, the largest producing area of gold in North America and beyond, This permit process is completely locked up by federal bureaucracy. In the state of Wyoming, we were on state ground. We dealt with state officials. It was just as arduous and tedious as any permit process should be, because they're keeping an eye out for their environment and for their local constituents and making sure that we don't go and create havoc. But we followed the protocols, we followed the due process, and accordingly, we were given the same amount of respect and understanding. And what we ended up with is a fully permitted, bucket-ready or shovel-ready project in the US. And John, Don, I think you're both aware that that puts us in very refined kind of territory. We're probably the only junior that I know of that has an undeveloped gold mine that's fully permitted in a gold bull market.
Right.
So another unique little standout around our company is we are purely listed on the NASDAQ. We are considering a secondary listing in Canada, but we're NASDAQ listed, US domiciled, US projects, US managed, other than this accent and the fact that I'm in Canada. I'm the only Canadian part of the story. A very unique share structure. I use the word unique around this company a lot, I know, but you know why, John. We have only 12.2, I think, million shares out, having just completed a financing at $7. Keep in mind, we're at $6.30, people. $7, we did a financing. We brought in such famed investors as Eric Sprott and a number of other institutional players who now recognize, the value and the opportunity available here. So if you actually buy stock tomorrow on the open market, you're buying shares for cheaper than one of the most famous gold investors precious metal investors on the planet. Another little interesting fact about our company, and I don't want to drag on for too long, but if I do ask and hope that any of you that do have an interest in this, go take a look at our website, which is usgoldcorp.gold. We do own the .com domain. We're working on it, but usgoldcorp.gold. You'll go in, you can see our presentation. It lays out exactly our location. It also shows you the economic feasibility of this project, which is very impressive. Don was referring to Numont and the margin between their cost of production, where the price of gold is right now. Well, we're estimating right now in our previous pre-feasibility study, we had an $800 all-in sustaining cost. That number is going to go up. That's a 3-year stale report. We're updating that in January of this year or February of this year, next year, excuse me. But we're expecting our AISC to still be in and around $1,000 or less, which is really impressive. Of course, as we all know, gold trading upwards of $2,600, $2,700. So wonderful economic kind of framework around this project, which is what we needed to advance it into permitting. But the deposit is bigger, and there's a lot of side benefit to this project that we're just starting to uncover right now. I won't get into great detail on that, I don't think, today, John, but it's something we could probably enjoy talking about in the future. And of course, that is our waste rock is a very valuable source of aggregate that is looked for with great earnest in and around the area, because we are just on the front doorstep of the Colorado Front Range. Huge amount of growth there. So there we go. That's a teaser for the future.
I'm going to start it off with questions, and I am not the type to throw curveballs. I just wanted to follow up what you had just said there, Luke, about the waste rock, because I would like to address that today, just briefly.
Sure.
How many tons roughly do you have, and what kind of things are you doing? Have you hired a consultant to kind of assess this for the company in terms of what it could mean for,
Yes.
Okay.
And it gets more and more interesting every time. I've even got information that you're not up to speed with right now, John. So under our reserve plan, under our permit to mine, our original reserve, okay, that our reserve is not really indicative of the entire deposit. What we did is we took, the top of the ore body, and we established a reserve, and we permitted the mine and the production. But the deposit is bigger. However, under that reserve right now, we have 40 million tons of excess waste rock. That rock is worth in the open marketplace right now because of its level of quality of granodiorite. It's worth somewhere between $20 and $25 a ton. It currently represents $0 on our balance sheet. So yeah, we have somewhere in the realm of $800 to $1 billion worth of waste rock. But the deposit is bigger. The pit will get bigger. There will be more waste rock. Right now, we operate off our reserve at a 0.9 to 1 strip ratio, which is very, very low strip, of course. However, you can also not just increase the strip by going after more of the deposit. Heck, you can just mine rock post-production of the copper gold deposit. So I think that's going to be appealing to numerous materials companies. And keep in mind, we have one of the largest materials companies in the US, Martin Marietta, located 3 miles to our south on the I-80 highway, and they are harvesting exactly that, just granodiorite, and they are selling it at $20 to $25 a ton, and clearly, obviously, profitably. So the fact that we get 40 million tons of it for free through our gold and copper mining operation bodes really well for us in terms of exploring the advantages and upside to that at the deposit. So that's going to be our 2025. Let's bring some more value to the shareholders.
So let's assume if it's 20 to 25 a ton on the open market now, would you be able to think about getting $6, $7, $8 a ton? I mean, obviously it's not going to be 20.
Well, we are, it's 20 at the gate. It's $20 at the gate. It's just that matter of fact. But we're evaluating all of that right now, John. Like that would be unfair of me to guesstimate on that because I still think the smart way to do this would be a partnership. We're not an aggregates company. You didn't buy our stock because you thought we were going to go into aggregates. You bought our stock.
No,
because, yeah, we have a wonderful
extra.
Yeah, exactly.
But even at $6, which would be implying like a ridiculous discount on that, you're looking at $240 million US
of free money.
Of free money. So that would help to offset your CapEx.
Or bring down our OpEx.
Right. And what is the current CapEx right now in the PFS? I know that will change next year. And secondly, could you entertain addressing that CapEx through some debt as well?
So yes, the current CapEx, as with our 2021 pre-feasibility study, is $222 million. We've been through a pretty inflationary period of time since December 2021 to December of 2024. So we're giving guidance somewhere in the realm of $300 million will be the upcoming. And like I told you, ASIC is going up too. So we reported $800 in our ASIC at that time. I think the ASIC, excuse me, everybody, is all-in sustaining costs. So how much does it actually cost us to produce an ounce of gold or gold equivalents in this regard? But so we see that creeping up to around $1,000. But how to monetize that waste rock is the question of the hour, of the day. And that will be our going into the new year. That's how we're going to work it out and answer it. Could we pre-sell it for a lot less money and use that as an equity component towards our debt, our debt equity ratio to raise the money to put this into production? Sure. Could we find a partner that maybe wants the waste rock and will deliver us ore to our run-of-mine pad? We've already had that offer. Are there interested parties already in the aggregate? Heck yes. We've had tests done extensively. We've had a large rail company in the US run tests on it. They're very interested in the waste rock for use by them as a rail ballast. Rail ballast is some of the highest spec aggregate there is, $25 a ton. So, hey, how are we going to monetize that? That's going to be our kind of secret sauce into 2025, John. I think that's where we're going to entice a whole new level of interest in this company, because we're not just this standalone copper gold, pre-development company that's waiting for the gold cycle to really swing into action to give us a benefit and give us a return on investment. There's going to be real big materials companies looking at us saying, permitted and ready to go. So it's going to be an exciting 2025, I think.
I agree. I'll turn it over to Don in just 1 minute. I just wanted to ask one more question. You mentioned about the PFS. Do you have a time frame roughly in terms of that update for us next year?
I'll say Q1 because I was saying for Q1 earlier this year, we did want to put it out before Christmas. George was adamant, but we've just had slow ups. I mean, I think we're allowed one slow up given how well we did in terms of performing and getting our permits within the timeframes that we indicated, and everything from we added, John, if you remember, not just to our mining permit, we actually stopped midway through the process of mining permit to bring in an industrial sightings permit, and we're still almost within guidance what we thought we'd get the permits at. So in this instance, we have run over in terms of the pre-feasibility, but we're exploring some other optimization avenues, including Jamison Cell, which is owned by Glencore Technologies. And we just got slowed up a little bit. So yeah, first quarter, that way I have a little bit of breathing room.
Sure.
Yep.
That's fair. I think it's smart to take your time with it. I mean, the gold price is the gold price, right? It's been resilient all year. Why rush such an important, piece of news? So that's great. Don, I'll turn it over to you.
Yeah, Luke, the big one for me is CapEx financing. So 300 million, that puts a lot of pressure on you because your market cap right now is 100 million. So you don't want to do an equity finance at 100%. So maybe 50%. So 50% only gets you 50 million. So you still need 250 million. It's not going to be easy for a bank to get 250 million from a bank. I mean, your payback is probably less than 3 years because you're high margins, but still that's a tough one. So I can see why you're looking at your aggregate. If you can get 80 million up front from your aggregate, which is about 10% of the in situ, then you only have to borrow 130. So that works for me. If you borrowed 130 million, I think that would work. So listening to what I'm saying, do you disagree with me or do you have other ideas? Or
Oh, I absolutely. So that's one of I'll say my pitches actually, is I talk about the fact that we have unique availability and strategy to be able to raise capital for this project. And it gets long-winded, so I'll try not to. I can tend to be a little long-winded. Sorry, John. But we do have access to non-traditional sources of capital. That ranges from the state of Wyoming have a history of putting up close to 50% on some CapExes in terms of through what they call municipal bonds. We have off-takers who are quite seriously very, very eager for our concentrate because there's a shortage of concentrate out there in the world right now. So the off-takers have been showing a lot of interest. But then, of course, even that large rail company that I referred to previously, whom I won't name right now, came to us with a 400,000 ton a year minimum letter of intent for offtake for rail ballast. So how can we monetize this? That is 2025. I do believe you've seen how stingy we are in terms of our share count. We take our shareholders very seriously. Why? Because we are shareholders. So we're going to do the best we can do, the least dilutive way that'll make the most sense for the project. And I do believe that's going to be some form of partnership at some juncture with somebody who's interested in our materials, for the longer operation of this project.
So let's say that things go smoothly, that you get your PFS done February, and at that point, do you need to do a DFS?
We do, and we will, because it's expected of us. And we have pretty much done all the engineering to get us there. That's the beauty of this. The bankable is not. So sorry for those listening who are not quite as understanding of terminology. A PFS is a pre-feasibility study. Don's referring to a BFS or a bankable feasibility study, which is the final document that you use to literally go to the bank and borrow the money to get into production. So we've done all the engineering to the level of a BFS, bankable feasibility. We It's not a huge spend, probably in the realm of $1 million type thing. Let's call it $1.5 million for sake of argument. I mean, these numbers are really quite inconsequential relative to our peer group, whom usually if somebody wants to go to a bankable feasibility, they're looking at double-digit millions, right? So, look, I told you it was a long answer. But yes, we will work towards a bankable feasibility study. That is the due course or common thing to do. But a lot of people already recognize that, hey, there's the grade, there's the reserve. It's pretty simple. It's very simple methodology in mining, by the way. It is just an open pit, you crush, grind, and float out a concentrate, and there's a slew of people that want to buy it.
Right. So basically what I'm trying to understand is how long it's going to take you to get into construction. I'm going to go all the way to into construction, not construction ready, but into construction. So do you think that, let's say, once that PFS is out, you're going to immediately start working the DFS so you can go to the bank. So you probably want to get that done in Q2, right? And so in Q2, you finish I call it a DFS, definitive feasibility.
Oh, excuse me. Sorry. Yes. Yeah.
So you want to get that out the door, and then you want to get the money, because it's going to be construction ready once you do the DFS.
Yeah.
So then you want to get the financing, you want to get into construction ideally in Q3, but you might not be able to do it that fast. But can you get into can you start construction in Q4?
Yes.
Oh, awesome. And you're confident that it's all basically going to fall into place. You're not worried.
Absolutely. I think this project we flew under the radar for several years while we were doing all of this, because we didn't want to, we didn't want to kind of create too much of a furor or an upset. We really wanted the community to understand and digest what we were trying to do. So we focused in on the community and the surrounds, and we went through the permit process in a very public fashion down there. But we also recognized that, heck, if we couldn't get this thing permitted, its value is nothing. So you don't want to create a whole bunch of hype and overextend yourself and then find out that you couldn't pull it off, you couldn't permit it. So now we're out telling the story. I still think that at close to $100 million in valuation, I feel that this company is not representative, or the valuation is not representative of the actual in situ value of the asset. I do believe. Yep.
Yeah, well, it's a joke how cheap you are. You're being very, very mild there. Okay, I have three more questions. They're actually all quick ones. Yep. So how long is the build?
2 years.
2 years?
2 years. Actually, George says more like 18 months, but I like a little bit of buffer.
Why is it going to take so long? It basically you have to build a mill.
Yeah, it's process, right? You've got to get the lead order on that milling, crush and grind, float technology. We can do it faster, but if I say 2 years, like I said, we've got some buffer. Things take time. I mean, that's the reality. Okay, George actually has a Gantt charted for in production at the end of, I think, 2026. I did not put words in his mouth if I'm wrong there, but I do believe that is around. Yeah, so that's his 18-month from July of next year.
Yeah, that's aggressive. Okay. Now, your board and your insiders, your closely held shareholders, I think the average you guys have probably paid is $10 a share, and it's currently
higher
$6
for some of us.
So you don't want to sell the company because it's so undervalued and you're underwater, and so why give this thing away?
Absolutely.
And so I'm just trying to clarify for shareholders. So the odds of you selling this thing before, a year into production, or before production, is very slim to none, right?
Hey, look, we're a public company. We're all out and open for business. If somebody wants to make an offer that is too good to turn down, you would never say no. But our intent is to build this. Absolutely. It's a cash cow, and that's George's terminology, not mine. It's a cash cow. And we've got all this additional benefit to it. And we want to be around this asset because it's going to benefit the community.
Well, let me rephrase my question.
Yep.
right now, I'll just give it a comparison. Free Gold Ventures. If somebody calls them up and says, "Are you for sale?" Yeah, we're definitely for sale, but our shareholders are not going to accept an offer below this price. So the odds of us saying yes are very, very low. It's
Yeah.
like, and that's a similar situation to you guys. I mean, if somebody comes in and says, "Hey, we want to buy your company, and it's a great offer. We're going to give you 100% premium," and I mean, just a fabulous offer. You're still going to say no, right?
Highly likely, yep. And it's different in the US too. I do believe the board gets to have the final say. It's not necessarily like Canada where it's the shareholders, but I don't want to talk myself into a corner there. But yeah, highly likely it's going to be a no because there's far too much value there. Even when we do our feasibility, feasibility is going to be running probably 1950 gold and 375 copper. Hello, gold's at $2,600. We can't show that in a presentation, but we sure as heck can recognize that at the gate when we're selling our concentrate, right? So, yeah, I think you're pretty bang on there, Don, with your.
We finally got to the last question. This has been a great interview, by the way. You answered everything. The final last question is your pipeline. That's kind of your weakness right now. Is basically a 12-year mine life. So tell me your pipeline. So you got CK, which is 12 years. Can you get it 15? And then tell me about Keystone in Nevada. You think it has potential? Go ahead.
It's it'll be a 15-year mine life all day long, probably 18.
Okay.
All we could do is establish a reserve so that we can move towards permit and go into the permit process. Mother Nature did not cut the mineralization off at our hypothetical pit shell. There is a lot more mineralization there to depth, and there's a lot more there laterally. A very, very famous geologist whom I spoke to on Friday, whom I will not name, but very well respected geologist said, "Luke, your deposit, I think that's a symptom of a much bigger system. You're sitting on a Boddington-esque type mineral body. So we don't know how big this thing is going to get, right? We do not know. But we're going to go in there and we're going to work around what we have. So Keystone, of course, was our flagship, okay? Keystone would dwarf anything we're doing in Wyoming with the luck of one drill hole. It is a monster. Why do I say so? It's a standalone domal district. 10 miles across the valley is the Cortez complex owned by Nevada Gold Mines, formerly Barrick, but now it's the combination of Barrick and Numont. That mineral endowment within the Cortez complex is reaching 60 million ounces and growing. We have a standalone, identical looking domal district. In terms, why is it identical? It's got the same geology, same lithology, same stratigraphy. This huge arsenic anomaly. People at arsenic, that's usually scares people away from gold. Well, where goes the arsenic in Nevada is the gold. The arsenic's just a little bit more transient. So we've got this monster, company-making asset. When Placer made the discovery at Cortez Hills, it raised their market cap from $4 billion to their ultimate takeout of, I think, around $12 billion. A discovery for us at Keystone, again, would dwarf anything we're doing elsewhere in Wyoming. It would my previous company, again, Gold Standard Ventures, it would probably dwarf what we achieved over at Railroad back then. And keep in mind, our discovery at Railroad through the discovery process, we reached almost $1 billion in market cap. Well, we've got an asset like that sitting here now, lady in waiting. So that will either be spun out and take its own dilution for our shareholders as they stand right now, or most likely will be spun out. But that project needs to be drilled, and we should all be shareholders.
Why would you spin it out? Why not make US Gold a big company?
Oh, we could bring it back in afterwards. I just don't want to dilute CK. Exploration in Nevada isn't cheap, right? Why dilute with $100 million currently, approximately $100 million-esque market cap? Why take dilution at a development project level when we have just a pure exploration asset? I think they'll be better off separated.
Well, that's
bring them back later.
As long as you keep enough so you have a tether on it. So if you keep 30% and you keep it tethered, then you can get it back. I totally agree with you. So that would be one option. The other option would be like to do a JV deal and make the other guy spend a boatload of money to get his option.
Yeah.
So there's that as well. Okay.
Well, we've been talking to them. We've been talking to a couple of the neighbors, and it's just not that marketplace right now. We broke Barrick's model with our one of our previous assets, Maggie Creek. By broke their models, what I mean is we had a project that was sandwiched right next to the Cortez mine up on the northern end of, sorry, not the Cortez mine, the gold quarry up in Northern Carlin. And their belief was that the mineralization there was far deeper than we estimated, and they were not interested in the project. We drilled one hole, and now Barrick owns it. So, these things can happen, and they can happen fast.
Yeah.
Well, thank you for your time. I'm done. Go ahead.
Thanks, Don. I think just from what I see looking at the screen all day long, every day, Luke, I mean, you're not getting rewarded even in this hot gold market to drill the heck out of something unless you're really hitting. There's been some outliers, of course, but I applaud you and the team for not diluting us as shareholders into the ground, right, to just drill Keystone, because as you pointed out, it's not cheap to drill Nevada. I would say, a spinoff, like Don said, where you keep a tether on it, that's your best option, right? Because I honestly have seen Barrick and some of these majors do nothing when they get into these JV situations, right? That really hurts you because it's like there's no news flow, right? So it's like a dead asset all of a sudden that they do on their timeline. I mean, you've been doing this a long time, so you know this, but I don't think a lot of the listeners understand.
We turned one down for that very reason. We turned one down from a major, and we're like, yeah, no. Right?
Yeah, interesting.
We knew that the rate of attack was not going to be worthy of what this project requires, and it's too good a project to just give away.
That's right.
Yeah.
Well, we'll leave it there, Luke. If you don't mind, just pulling your disappearing act as you reappeared 45 minutes ago.
No problem. Thank you, everyone.
Don and I will summarize for the listeners, and we really appreciate you making the time here right before the holidays.
Oh, I appreciate it. Thank you, John. Thank you, Don.
Thank you, Luke.
Thanks, Luke. So, Don, I know you and I have talked about the stock before. We've had George on, I think, last year around this time. So what do you think from today's interview? Anything new that you picked up?
Well, the 300 million it's a lot of money for a 100,000 ounce producer. I think the NAV's going to come in around 500, over 4. So I don't think that it won't be easy for them. They need to raise 250 million. That's a lot of money for a company with a market cap of 100 million. So the capex is an issue. I think that is putting some downward pressure on the share price, because investors are like, how are they going to finance this thing? It's not easy to raise money, but one thing they have going for them is the state of Wyoming. The state of Wyoming, they will fund capex projects through bonds. The state will they will basically do some bonds for you and raise the money for you. So that's a real positive. They'll be able to use some. I think the state of Wyoming, who's been really behind this project, will help them with financing the railway. That's another good one. So even though the 300 million is really high for a project of this size, I don't like the 2-year build so much. I don't into 26. I think that's a stretch, but we get first half of 27. I'm okay with that. It is super cheap. This thing has 5-bagger written all over it. It's basically $1,000 ASIC is low. Plus, they're going to get that aggregate, which is going to lower their OPEX even more. I think they're going to, depending, they might sell it up front. I think they should sell it up front to pay for the CapEx. But for me, I think it works. I think the risk reward works. I think it's definitely a hold here. And then we'll see what happens with Keystone. Basically, we're getting Keystone for free. And right. It's a big property with a lot of potential. So from
Absolutely.
that perspective,
Yeah.
from that,
Keystone is how I found US Gold a few years ago. It was not CK. It was all Keystone. That is a huge land package they have, and that can be positive or negative, right? Because of the drilling costs, as we both pointed out. But just to piggyback on what you just talked about, I wrote down some numbers. So the capex as it sits in the PFS right now is 222 million. Luke said, they're modeling 300 million, which I think is very smart. They're kind of telegraphing to the market that the capex obviously has gone up since the report. But as you pointed out, to have a state that's willing to put up as much as 50%, through the issuance of muni bonds is unusual and helpful. I've actually been to the project a couple of years ago. I've met some people in the government, in the state government in Wyoming. These are very supportive people. This is the first hard rock mine that's been permitted in decades, according to George. Like this isn't something that normally happens, right? So this is a really special project.
right,
And I personally feel, even if you're looking at a $300 million capex number, that people are not factoring in the fact that it was mentioned that offtake companies are interested, right, in working with them. What happens if you get like 150 or 200 million of your 300 million in debt? That changes the ball game completely, right? So I think with 12.2 million shares out, these guys are sitting in a really good spot right now. Um, Shares at $6.38 per share. It's on the NASDAQ. It has liquidity. I think that's really going to help them in a $3,000 gold market. There's going to be a lot of generalist money trying to find stocks that look like this, right? That don't have that huge bid-ask spread. It's trading on a good exchange. It's got a tight share structure. Yeah, we really like it. I mean, it did a lot of volume at $8.50 just a couple of weeks ago. So
yeah,
yeah, I mean, they financed into strength, but the haircut they've received since then to us seems a little bit extreme.
right. All right, let's call it.
All right. Thanks everyone for joining us today. We really appreciate it. Probably won't have anything before the Christmas holiday. So happy holidays to everyone. Thanks for following Don and I. Don's got a great website, goldstockdata.com, and you'll see my details following this. Thanks
Oh.
everyone and have a good one.